Hi friends, I wanted to talk to you a little bit about the difference between FHA and conventional, as I've done on other posts. But with this video, I want to talk specifically with a 650 credit score or below. That's important to make the distinction because in my last video talking about the difference between FHA and conventional, I showed with a higher credit score. But I also made the comment that if you have a lower credit score, that might be an option to go FHA, and here's the exact reason why. Now, if we're looking at a 3.5% down FHA loan or a 3% down conventional loan, again, both first-time home buyers, and a first-time home buyer is anybody who has not owned a home in the last 3 years. Again, this would be with a 650 credit score or below. Your interest rate FHA today would be roughly 5.25% with a 6.378 APR. Your interest rate on conventional, and this is the big difference, when you get down below 700, 720 on conventional, your interest rate starts to climb pretty rapidly. Your interest rate today would be 6.125 with a 7.9 APR. So 6.125, pretty large difference there, almost a 1 point difference. The payment would be $27.85 on FHA or $32.24 on conventional, and I'll break down the payment here in a second. Cash to close is going to be relatively the same, pretty darn close. It's going to be $27,000 FHA, $26,500 conventional. The difference in payment is where the big difference is going to be. You're talking about a $438 difference in payment. So anytime that your credit scores are really below 700, you're going to want to take a very hard look at FHA. Even though FHA has upfront mortgage insurance that's financed on top of the loan amount, even though it has MI that's going to stay the whole life of the loan, it's a great loan to be able to get into a home and purchase that home and have a lower payment, knowing that down the road either you're going to sell or potentially refinance. Now let me walk through the payment breakdown. I said FHA was 3.5% down and the payment was $27.85. That's broken down into a $21.68 payment for principal and interest, $285 a month on taxes, $60 a month for homeowners insurance, and then $271 a month for mortgage insurance, equaling $27.85. Conventional, we're looking at, again, a $23.57 principal and interest. So you'll notice that the principal and interest payment is a couple $100, $150, $200 difference between the two, $200 or so, between the FHA and conventional. But here's the big difference. So the drive-in interest rate didn't affect the payment a great deal, about $200 a month. You're at $28 for property taxes, $60 for homeowners insurance, but mortgage insurance is going to be roughly $521 a month, which that's a significant difference, about a $250, $200 difference. That's what's driving the payment up. So not only do you get hit on your interest rate when your credit score is below that 700, you get hit on interest rate pretty hard, hence almost a 1% difference interest rate, but your mortgage insurance is also very significant in cost as well. As we look at the closing costs are going to be relatively the same. The big difference is going to be your down payment, but with this we're showing that you're paying a little over 1 point to buy the interest rate down on conventional, where you're paying less than 1 point to buy the interest rate down on FHA. So total cash to close is $27,000 FHA, $26,500 conventional. The big thing you want to really pay attention to is anytime you're below a credit score of 700, you really want to take a hard look at FHA. That can be a strategic move. FHA could be a little harder to get an offer accepted in today's market, but it definitely will not be impossible. So just take a look at that. If you want some numbers on your specific loan, please reach out, let me know. More than happy to help in any way that I can. If you've liked this total cost analysis that we did here, please like our YouTube channel. And again, reach out. We're happy to help in any way that we can. Thanks. Have a great day. Bye-bye.